Hi, Terry back again. Back with video number 3. What we're going to talk about today are some case studies. So having done this, let's look at a couple real-life case studies on how the Better Money method works for people. In this case, let's look at two people. One is a self-made millionaire doctor, actually not as rich as most doctors, but still had some money. And the other is a pilot that thinks he can self-insure himself. First case study, meet David. David's 55 years of age. He has a little over $1 million in qualified accounts and in just portfolios, outside of qualified accounts. He's single, and in his case he had a special needs child that he was worried about taking care of in the future. Let's look at his goals and concerns. He was paranoid about the taxes, so he wasn't sure how much money he could take out of his qualified accounts and how. In fact, it's interesting. After we talked the first time, and he's in Portland, so again, this was over the phone, he sent me an email and he said, I just met with my accountant and I discovered my taxes are going to be astronomical when I retire. So he wanted to make sure his daughter was taken care of for her lifetime. He wanted to enjoy his retirement without taxes, and he had no idea how to draw out Social Security. So what I did, I reviewed his financial statements, I reviewed his Social Security options, I put an IUL in place that would secure his retirement and his daughter's. Now, in his case, he lived in Oregon. He has state tax and federal tax. His cumulative tax bill on his $1 million was $225,000. As I said before, he sent me an email saying he'd talked to his accountant when he retired, his taxes would be astronomical. What we were able to do was reposition that money into that IUL, eliminate all of his out-of-pocket expenses for taxes, and at the same time put a plan together that allowed him to maintain his lifestyle when he went into retirement. If you are lucky enough to have $1 million or more in qualified accounts, what I can do with the Better Money method is show you how to reposition that money in such a way that you will eliminate all or the vast majority of your out-of-pocket tax expenses and still have more money than if you'd left it where it is. So by doing this, we reduced his paranoia and helped him enjoy his retirement years with the full security of knowing he was no longer subject to market loss, he was no longer subject to taxes, and he was getting a very respectable rate of return. So now let's look at case study number 2. This is an interesting couple. Jim and Sue. He's 62, she's 60. Jim's a retired pilot. Sue's a stay-at-home mom. I've known them for years, and I've always told her she had the more important job. They're very family-oriented. He is lucky in that he has a full military pension and an airline pension. His goals and concerns were, he said he could self-insure. He felt he was capable of managing his own finances. He also indicated he had a distrust for advisors. But he wanted to ensure his family was taken care of. So he wanted to avoid taxes at all costs. Here was his concept of avoiding taxes. He had $2.4 million in his IRA. What he'd done when he retired, he took his 401k and stuck that in there, and then he was able to get half of his pension from the airline in cash, and he put that in there. So he felt he was very secure, and what he told me he was going to do is, this is his income now, he was going to take enough out of his IRA to start to take it down, but keep it below the next highest tax bracket. Well, when I reviewed the information he gave me, two things became very clear. The way he'd set up his retirement plan, when he passed away, and I just assumed at 85, because he's had a quadruple bypass, his wife's in perfect health, among other things. His wife was going to lose the military pension and have a drastically reduced pension from the airline, the way he'd set it up. In addition to that, I sent him a paper we have on RMDs, which explained to him he was not going to be able to pull a small amount out of this IRA with $2.5 million into it because of RMDs. In fact, when he got 70 and a half, his taxes, his RMD taxes were going to be $50,000 a year on that IRA. What this meant was if he lived to be 85, over that 15 years, he would basically deplete half of his $2.5 million in taxes, assuming it stayed flat, which is a best case scenario I see in the market for the next 15 or 20 years. So that meant when he passed away, his wife would have drastically reduced income from his airline pension, would have approximately $1 million left to spend the rest of her life on. And we all know $1 million today isn't the same as it was 20 years ago. And 20 years from now, $1 million is certainly not going to be the same as it is today. So what I showed him, by using the IUL, in his case, we were able to accomplish three major things. First of all, we eliminated all taxes on it. He didn't write a check out of his pocket for anything. That eliminated his RMD taxes. Secondly, we doubled his estate, and he was very family-oriented. But thirdly, and I feel most importantly, if we assume he passes away at 85, if we assume his wife is going to live another 15 or 20 years, the IUL will give her $300,000 a year tax-free, growing with inflation for the rest of her life. Now, if she ended up with that $1 million in 15 years, 20 years, there's no way you're going to get $300,000 out of $1 million every year for the rest of your life. So by implementing a Better Money Method plan, just to recap, I doubled his estate, I eliminated his taxes, I provided security for his wife to the tune of $300,000 a year after he passed away. So, to review our process, what I ask people to do is review the Cliff Notes on our book that you downloaded after video 1, gather all of your statements together, both qualified and non-qualified, determine what your needs are in retirement, and determine if we are fit to work with each other after a quick phone call. What this initial consultation on the phone will be is we will discuss your current situation and your goals. We will discuss what's working well and what is not. We will develop a scenario for your particular plan. With the Better Money Method, I always work with the individual to accomplish what they're trying to accomplish rather than a cookie-cutter plan. 4, you decide if you want to move forward with us.